Hey guys, Alchemist here. So I'm just going to go over a trade recap on a short that I took yesterday on AU. I'm going to start again just with a fresh weekly chart, but please do let me know in the comments if you do want me to keep doing these top-down analysis at the beginning of every trade recap, or whether you'd just like me to sort of start from the 4-hour or the 15-minute and just focus on the entries. So let's just mark up our demand and supply levels. We should be pretty aware of where they are now. We've looked at this chart quite a few times. So this here is our demand. This here was the supply that we had tapped into. And then we had this sweep of liquidity above. Perfect. All right, so that's all we need to do on the weekly. Let's jump down to the daily. On the daily, I have 3 objectives. So the first objective is to identify the most recent break of structure. And then after that, just identify the daily high and the daily low. So for me, on the daily, I need to see a break of structure and a pullback of at least 110 pips. So we can see here we did have some bullish structure. We swept the liquidity above and then we started breaking to the downside. This most recent pullback here is quite a lot more than 110 pips. It's 220. However, we haven't yet broken this low. So I need to go back and I need to see where the most recent break of structure was. That was over 110 pips. So if you look at this here, this is 144 pips, and we definitely have a break of structure to the downside. So to me, this is the most recent daily break of structure. That would therefore leave this as our daily high, and this as our daily low. Remember, we can't actually start marking the low until we've had that pullback completed. In this case, we have, so we can. That's the daily done. Let's jump down to the 4-hour. I really like being systematic in my approach this way. It means that I will always do the exact same thing the same way, and it can mean that over a set of X amount of trades, the probabilities will play out in my favor if I have an edge, which I do. All right, so on the 4-hour, we need to identify again the most recent break of structure. For the 4-hour, we need to see a pullback of 90 pips. So again here, we did see some bullish structure, then we broke to the downside, and then we're continuing sort of bearish at the moment, but it's sort of within a range. So to me, let's have a look. This here is just under 100 pips, 99. So it's greater than 90. So this here, when this broke, this is our most recent break of structure on the 4-hour. Leaving this as our daily high. And this as our daily low. Sorry, our 4-hour low and 4-hour high. Again here, this is over 90 pips, so I can actually mark that as the low. Once we've done that, we just need to identify some valid POIs in this bit of price action. Once we actually have our 4-hour break of structure and our 4-hour high and low, personally, as a day trader, this is the only piece of price action I need to worry about, just this part here. Okay. So the valid POIs, we always have the extreme as a valid POI. Okay. We do also have these buy to sell wicks, which when we drop down to the 15-minute, we'll see it's an interaction zone. And we're looking to take a continuation short maybe from this level. At the time, that's what we were sort of looking at, but let's jump down to the 15-minute now. So I've just actually used replay mode to take us back to yesterday at 4 p.m., which is 1 hour before London Open. So that is when I get to the charts, and I would have already had everything marked out, of course, but this is when I'm actively just watching the market. So this whole big blue bar, this is just the demand zone on the weekly. We don't need to have that there. We already know that's what we're tapping into. Essentially, using the expectation of order flow, knowing that we are bearish on the 4-hour, bearish on the daily, and knowing that this low failed to put in a high, take out this high, because remember this whole leg here is our daily leg, we can say that this low is actually targeted. And what that means is we should be trading towards it, and we should be looking to see that this low fails. Make it a bit neater. Zoom in. Okay. Now that we're on the 15-minute, what we need to do is look at this and identify the real structure. So to me, what I'm seeing here is accumulation of orders, a big break, a pullback, another break to the downside. However, with this one, there wasn't much conviction, and we did see a V-shaped recovery. We're looking to see and we've seen this pullback higher into this range. And to me, this here, which was over 22 pips, it's just under 60. This here is the 15-minute break of structure. this to be our 15-minute high. And this as our low. Cool. So I do like using the premium and discount on the 15-minute, not so much on the 4-hour and the daily, but I do on the 15-minute. If you look at this, we can see that we've actually already pulled back into premium. So after this here, we've pulled back above. We do have this nice zone to trade out of here. And we can see that this was actually due to, I believe it was FOMC on Friday. We've got this demand area. So currently price is bullish on this time frame. It's bearish in the terms of the most recent breakup structure being bearish. However, we have bullish order flow. So that's two things that you don't want to get confused: structure and order flow. Currently the structure is bearish and the order flow is bullish. To take a high probability trade, you need to wait until those two are aligned. So given that we are bearish on the 15-minute, we need to have bearish order flow to increase our chances of taking a profitable trade. Essentially, what that means is we need to start seeing demand zones fail and supply zones hold. Okay. So this is our 15-minute leg. This is the zone that broke again to the downside. We've seen a pullback. It's still not quite into the extreme, but what we can say now is, especially given that this here had swept liquidity, that if we did get a pullback back up into this area and we saw our time zones align again and we could take a continuation short, then it would be a good idea. So let's mark this out here. Okay, and let's play price forward a bit. Let's mark out a couple more zones. So we can see here did have this interaction as well in these buy to sell weeks. This, however, failed to put in a lower low. We can see all of this here as just generation of liquidity. Okay, and here what we can see is we also have this zone, which price has now come into. We can say that this here actually was the inducement for the zone above. So this was the liquidity to be swept, and we did sweep that liquidity. We came into there and we took the liquidity above these highs. And this is actually a better zone too, because this was an interaction zone with this demand level, which was actually the demand level that pushed us up to create this liquidity sweep above. So what I was looking at the time is, if this here was to start realigning to become bearish and we could see our entry model play out, then I'd be very interested in getting into a short. So what time is this here? Yeah, so let's go back just one candle and drop down to the minute, the 1 minute. Okay. So what we can see here is this was our last point of demand. And this here would be where the liquidity and the first part of the change of character would be. There's our CHOCH down. So if you did really want to be aggressive, you could have actually just entered off of this. However, that's not how I like to trade. I would have waited for the first level of respect. Let's just mark that a bit darker so you can see it. So essentially what I wanted to see was this fail, generating some more liquidity, tap, and then go. So we'll play price on a bit. Perfect. So we have now had, so this here, because we didn't have a body structure below, sorry, a body close below, I wasn't willing to start playing shorts just yet. However, now when we have this here, I'll actually mark this as demand failure. And I actually had a limit set, which missed me by 0.1 pips. I believe it was just here. Oh, was it a bit higher? Yeah, it must have been this guy. I had a limit set there. Yep, and it missed me by just under, I think it was 0.1 pips. I'm actually going to try to put up my MC4 stats into this video, so hopefully when you're watching this, it'll pop up somewhere. Still got to work out how to do that. But yeah, so I did miss that entry. And then what I'll do is, sorry, just because I can't remember exactly where it was. We're still a little bit away. Perfect. So here, I was actually, oh, sorry. That's right, I was entering off of this. And I was really conservative with this. I did have a stop loss of 3.3 pips, which decreased my overall R. However, just because the week before I hadn't really been able to trade, and because I wasn't yet like 100% that this was going to hold, I just wanted to cover this as well. And that's why I did play this with a bit of a larger stop loss. But you can see overall what we had here was the inducement by the liquidity being built, a tap into there, and then we see a very nice rejection out. So once I saw this volume enter, I was happy because I sort of saw that the bears were back in control. And then as always, I will take my 25% partial at 4R, which was achieved within the first half an hour, 31 minutes. And then if we go up to the 50-minute, I was sort of expecting a pullback once we liquidated this. But essentially my next target, it was a bit lower. It was at 8R, but it was actually just before I was about to go to bed. And I don't like holding my trades with a large amount of volume overnight. So I did close the majority and I did just leave a 10% runner. But looking at this, what I saw was this low had failed to put in a higher high. So this high was obviously lower than this high. So I looked at this being targeted low. And I did actually think that we were going to come all the way down into this, which is where the real move sort of started. But as you'll see in a minute, it didn't actually come all the way down to here. And the remainder of my trade, just that last 10%, did come back out to break even. We go to the 1 minute. And you'll see once we liquidate this, we do start to see a bit of a pullback. And all this is just generating some more liquidity to the downside for price to continue lower. And we have this zone here. Price tapped, continued lower. I did actually take a scale in here as well, which I'll show, and that did come out as a stop loss. Again, to be completely honest and transparent with you guys, I was a bit hesitant at this point, seeing price rejecting and becoming bullish again after this 1 minute change of character. But knowing that the overall narrative that was correct, given that we were bearish on every time frame, and knowing that I need to remain systematic in my approach, I did not close the trade early and I did let it run. And I'm glad I did, because a few minutes later, we did actually continue to fall. And I ended up taking 65% of my trade off at 7.3R. And this was at, just after 10 p.m. I am actually waking up these days at around 4:30 a.m. or 5 a.m. to go to the gym before working in financial planning. So I did want to just sort of close the majority of it, so I didn't have to, whenever I found whenever I was holding trades overnight, I wasn't getting a good sleep, and then that would just affect my next days of trading and everything else and just my overall mood. And it just wasn't worth it. So I just do like to only hold a small portion overnight if I have to. And again, this was just internal range liquidity being built. This came down and tapped. And you can see I did have this overall target of 16R, which I did leave a 10% runner for, but you'll see it came back up. Didn't quite make it all the way down. We just came into this zone here, and then it came and took me back out at break even. which is fine. So I did calculate it, yes, this morning, but I've forgotten. Let me just calculate the total R. So the 65% at 7.3 is 4.75 plus the 1R here. However, we do need to minus that 1R back because I did take that scale in this area, which was a stop loss. So overall, it was 4.75 R for the day. My target is 5 R for the week, so I only really need another 0.25 R. And it allowed me to just sort of, today I did have some things that I needed to take care of after work, and I was a little bit stressed about needing to be here for London Open, but knowing that I'd already made this trade yesterday, it just gave me a bit more peace in knowing that I don't have to be at the computer for every London Open every single day, as long as I'm achieving my weekly, monthly, and yearly goals. And by using this sort of systematic approach, I can do so. So yeah, that's all I wanted to cover today, guys. If you do have any questions or if you'd like to see me cover any more or different content, please let me know in the comments below. I hope you have a great week.